Hello traders and welcome to another video review. Today is Monday, the last day of the February 2022. We are going to start with the Forex calendar. Overnight we got some data from the Australia, and it looks like the retail sales, as you can see, had been published as NNZ business confidence and private sector's credit together with the company operating profits. Nevertheless, those data are not that much market movers. However, we are going to take a look at the Australian dollar. Plenty of data during the London session from the Switzerland retail sales, gross domestic product and KOF economic barometer. Moreover, during the London session, we got the CPI data from Spain. They are expected to increase from 6.1% to 7.1%. During the New York session, we got the data from the Canada in form of the industrial price index, raw materials price index, and of course the current account. All of this data are scheduled for release 2:30. Moreover, there are data from the US gross goods trade balance, wholesale inventories, and Chicago Purchasing Managers Index. So as you can see, some data are quite important for the market participants. However, I would like to take a look at the Australian dollar, Swiss franc, and maybe USD to the CAD. So let's start with the technical analysis part. We are going to take a look at the US dollar index daily time frame chart to see what is going on. As you can see, recently we made a high at the level of 97.71. However, this high was very quickly reversed. The price reversed from this price. Next day we almost test the technical support at 96.42. the low was 96.49, and right now we are going higher. We are going higher towards the technical resistance at 97.43. However, this might be not the last level for the US dollar index. The bulls want more. The bulls want to get towards 98.9850 and then to test the round number of 100. In order to cancel this kind of a point of view, the US dollar index must fall below 96.42 and then of course below 95.12, as long as we are trading inside of this channel. And this now is multi-month uptrend inside of the channel. The domination of the US dollar is clear for market participants, and we should expect higher levels of the US dollar index. Let's take a look at the Australian dollar. Australian dollar to American dollar. What is going on here? The situation is kind of a different than on the previous chart. However, there is still no obvious reasons for the Australian dollar to go up or down. We got this shooting star candle 23rd of the February around the level of 7,285. This is the high. Two levels of the technical resistance are working very nicely, and they are preventing the bulls to continue the rally. The key technical resistance 7,317 is still present, and the market is locked. It's locked between the level of 7,234 and 7,096 pips. So we are trading inside of this zone. As you can see, this is the next intraday technical support around 7,141. So we need to break out from this channel definitely, because right now we are bouncing up and down around this line. And of course, if the market wants to come back to the uptrend, we need to break back inside the ascending channel that you can see here. So please keep an eye on the Australian dollar for the potential breakout from this consolidation here. It doesn't seem to me like these lines are working anymore, so I will just remove them from the chart. This is not what the market participants are seeing right now on the Australian dollar, so it's not necessary to have it on the chart. Momentum is still positive, however it's not strong, 53 points only. So The bulls are still in charge of this market. However, it's not that obvious anymore. Let's take a look at the US dollar to the Canadian dollar. US dollar to the Canadian dollar is going up, so our scenario, as you can see, this red arrows has not been completed, because this level, 61% of the Fibonacci retracement 1.2768, has been attacked 5 times, and 6 times was broken and then reversed immediately. So pathetic price action from bulls. They are not going to break higher with that kind of a price action. Basically, the market is now range bound and it doesn't know where it wants to go or what it wants to do. Of course, right now, because of the range, the key technical resistance is the swing high at 1.2962, and this is the range. If we break out of the range is violated, of course, but it's very quickly the price is very quickly pushed back towards the range between 1.2812, 1.2647. This is a bearish engulfing pattern, very big bearish engulfing pattern, because it looks like the market participants are not ready to rally above 1.28 and 12. So please keep an eye on this level on the USD CAD as well. And let's take a look at the Swiss franc, US dollar to the Swiss franc. This is the situation we've been concerned many times before. What I mean is that we are moving inside of this channel, but we ain't going anywhere. This is again the example of the market that wanted to rally higher, and then of course there is not enough momentum in these up moves in order to actually start on rallying. So we got the situation of the channel bounded market that is moving up and down, whipsaw trades, and no further developings are being noticed on the US dollar to the Swiss franc. We are just bouncing up and down. So this is kind of a trendless market right now, because we need to break above 9,377 in order to test the high from last year, 9,477. So please keep an eye on these two levels. So the same situation is at the level of 9,346 and 9,295. So those levels are technical resistances. On the other hand, the range is being limited by the technical support at 9,177, and there is another nice technical support at 9,151. This level here. However, this level is below the lower channel line. This line doesn't actually work very well. Market is much more concerned to prevail the range than to prevail the channel. So 9,177 support, 9,151 support, 9,094 pips support, and the lower range of the support is 9,084, 9,055 pips. And of course, right now, if you take a look at the RSI, it doesn't tell you much, because the market is not trending, it's bouncing up and down with no momentum actually. So this USD CHF might be in progress for quite some time for now. So I'm not quite absolutely sure where this market should go next. We are still range bounded and bouncing up and down. Last but not least, let's take at gold. The spot gold market, as you can see, is being under the control of bears recently. We had this big candle here, and it looks like after that very spectacular rally over $200. Right now, the market of gold is trying to go back to levels below 1,877. However, for now, we are consolidating around the old supply zone, 1,899, $1,916. We got the local, you can say local high around 1,930. However, the last high was made here at 1,973 dollars. So this is another very interesting zone. New swing high and two technical supports, old technical supports. Only if we break below $1,877, we can say that okay, the market is going back to test some lower levels. Maybe the bears are back, but we need to take a look at the momentum as well, and the momentum shows us that we are still in the positive territory, and momentum is quite strong, 63 points right now. So maybe not all is lost on the spot gold market. However, we need more decision here what to do to keep 1,877 as a technical support and rally higher, or to consolidate around the level of 1,900 basically, and to see who will be the winner of this consolidation, because we will know that after the breakout will be done. So this is my point of view on spot gold as well. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.